Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we will be discussing what is driving cable. Welcome to the Forex Academy educational video. In this session, we will be looking at the British pound and discuss what might be driving it within the realms of the pound versus the United States dollar, also known as cable. After a bullish rally at the end of June, where price action had consolidated due to the end of month and end of quarter rebalancing, the Great British Pound found some buying pressure at the beginning of July, and when price action in cable largely consolidated for a few days, due to the fact that Britain and the European Union had completed a recent round of trade negotiations, which had fallen largely flat and all had come to nothing. However, at position A, the European Union chief negotiator Michael Barnier announced he would be having dinner with the UK's negotiator David Frost at number 10 Downing Street. That evening, no doubt, they would have been eating fish and chatting about fisheries, which is one of the biggest stalling points between the UK and the EU, being able to reach an agreement on a future trading deal. The announcement of this meeting gave a lift to the pound, causing cable to make fresh highs, just below the key level 1.26 at position B. The morning after the night before induced some negative tones from Barrier, who declared that there'd been no major developments, and cable consolidated and pulled back to position C, which was just before the Chancellor of the Exchequer, Rishi Sunak, released the emergency budget. This was largely well received by the market because it will help people retain their jobs as the UK tries to recover from the COVID pandemic, especially the younger generation of the United Kingdom. Job losses would be limited to UK government offering a further olive branch in the form of a £1,000 payment to companies in order to retain staff at the end of the furlough arrangement. After a strong move above the 1.26 level, sentiment shifted to a downbeat. United States dollar, which began to reverse some of its bad performance across the board on all of the major currencies. This was mostly driven by better than expected US data releases, and this sent cable back down to position E. Some of this would have been down to profit taking. However, we see an uptake in the pair again during Friday's European session to retest the previous highs at around 1.2663. A double top always makes the markets nervous. However, at around this time, President Donald Trump came out and said that there would likely be no phase 2 to the trade deal with China. It simply wasn't on his mind. This sent a shockwave through the market where US equities initially were sold off, and which saw buying pressure on the United States dollar and pullback in cable. The financial markets, and especially the Forex markets, are extremely volatile at the moment and liable to huge swings caused by a myriad of reasons, but this is mostly centered around the fallout from COVID-19. Tensions are building with China as it flexes its muscles over the new security law regarding Hong Kong, and this is causing fallout with most trading partners. The UK government is about to make a decision with regards to the Chinese technology firm Huawei and whether or not to implement its 5G technology within the UK communications infrastructure. Declining the use of Huawei technology may be seen by the Chinese government as further indication that relationships are souring between the two nations. Any increased tensions could also cause downward pressure on the pound sterling. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.